These TradingView indicators were released this month, and let me tell you something. They're the most accurate tools for calling market reversals I've ever seen. If you've been looking for an ideal strategy to buy cheap and sell high, these indicators are your best bet. They're easy to use and can be applied to any stock or currency. In this video, we'll teach you how to take the best out of these tools, as well as do a quick backtest on the Bitcoin price chart. It doesn't matter if you're a beginner or an advanced trader. With these indicators, your market analysis will improve dramatically. Before we start, if you're looking for easy-to-follow trading tools with a proven win ratio of over 80%, EasyAlgo has what you need. Most traders end up losing money due to lack of emotional discipline and not having a back-tested strategy that works. EasyAlgo takes the guesswork out of trading, giving you real-time, non-repaint signals so you can confidently identify profitable entries and exits. Trade any market with ease using the best algorithmic-based confirmations, and finally become a profitable trader. EasyAlgo is trusted by thousands of traders. We highly recommend it not just for the tools you get, but for a private community of professionals where you can chat and learn trading 10 times faster. By the way, if you sign up through our link, you'll get a 20% discount. Let's return to our trading indicators. To install them on the chart, open the Indicators menu and search for Lux Algo Supply and Demand Daily. This TradingView indicator displays daily supply and demand areas on a user's chart. These areas are constructed using market data from a previous daily interval. The supply and demand areas and levels displayed by the indicator are intended to provide potential support and resistance levels for traders. Supply areas highlight where buyers are willing to exit the market and sell the asset, thus providing resistance and potentially causing prices to reverse or bounce back downwards. Conversely, demand areas highlight where buyers are willing to purchase the asset, thereby providing support and potentially causing prices to reverse or bounce back upwards. The indicator allows users to study the evolution of supply and demand from one day to another through historical areas. Wider areas highlight prices avoiding reverting to this area, while thinner areas highlight prices returning more frequently to them. Trends can be determined by looking at the price position relative to the previous day's supply and demand areas. If the price breaks down from the demand zone, it indicates a downtrend, while if the price breaks above the supply zone, it indicates an uptrend. Pullback or throwback scenarios can also be common when using this indicator. For example, in our strategy, we will buy when the price bounces off demand level, indicating a reversal to the upside. Conversely, we will sell when price is rejected by supply. The settings for the Lux Algo Supply and Demand Daily Indicator include threshold percentage. This is the percentage of the total visible range volume used as a threshold to set supply and demand areas. Higher values return wider areas. Resolution. This determines the number of bins used to find each area. Higher values will return more precise results. Intrabar time frame. This is the time frame used to obtain intrabar data. You can choose any time frame you wish. Default inputs are recommended. For indicator number 2, we will add the Relative Trend Index by Zierman. The Relative Trend Index is a technical analysis tool designed to measure the strength and direction of a market trend. This innovative indicator combines both trend following and mean reverting characteristics, with a unique ability to adapt and respond to market volatility while minimizing the impact of minor short-term market fluctuations. Compared to the Relative Strength Index, the RTI offers a more sophisticated and precise approach, especially in identifying trends and overbought-oversold zones. The RTI measures the relative positioning of the current closing price within its recent range, providing a more comprehensive view of market conditions. It also allows for user-adjustable sensitivity, making it more resilient to sudden market fluctuations that could produce false signals. In order to improve the indicator, we can change the range between overbought and oversold zones. The wider the range, the stronger the reversal. We will set the overbought zone at 150. The oversold level will be set at -50. Now the RTI offers a more accurate reflection of the market's condition. In practice, the RTI plots a line around a midpoint of 50. When the RTI is above 50, it implies a bullish trend, and when it's below 50, it indicates a bearish trend. The further the RTI deviates from the 50 line, the stronger the trend is perceived to be. Now you have a good idea of how these indicators function. Let's combine them into a simple trading strategy with clear entry rules and money management. We'll start with long trades. For a buy signal, 3 conditions must be met. First, the price must return to the demand level. As we already know, Many traders execute their buy positions at this level, resulting in a price rise. However, it doesn't mean we should buy every time the price drops to the supply zone. Our goal is to minimize losses as much as we can. That's why we implemented the RTI indicator into our strategy. With the help of this tool, we know if the market is truly oversold. So condition number 2 is to have the RTI cross the oversold level to the downside. Finally, a third rule is to wait for the RTI to leave the oversold zone. That's the last confirmation before we open a long position. If you're more conservative trader, you can wait for the RTI line to cross the moving average to the upside. This way you'll get stronger confirmation of a trend reversal. However, you'll be more likely to buy the security at a higher price. Set the stop loss a couple pips below the supply zone and target at least 2 times the risk. Let me give you one more example of a long trade. Take a look at how the RTI indicator eliminates losing trades, by the way. With this additional confirmation, the winning ratio of the strategy increases up to 70, sometimes 80%. In the following example, the market became oversold, which is confirmed by the RTI. At the same time, the price bounced off the support level. Again, you can either open a long trade when RTI leaves the oversold zone, or when it crosses above the moving average. For short trades, ensure the following is met. First, the price returns to the supply level. Second, the RTI becomes oversold. Third, the RTI line leaves the oversold zone. Sometimes opening a trade when the RTI line crossed the moving average can give you a better price. Backtest both methods and stick with the one with a higher profit factor. Before we proceed to the backtesting, if you're looking to automate any of your trading strategies, Pionex GPT can help you do that. You can start making passive income from trading by creating your own fully customizable trading bot, just like we did in our previous videos. If you're a complete beginner and creating an automated strategy is a complex task for you, don't worry. Pionex has 16 built-in trading bots and dozens of robotic trading strategies shared by other traders. You can simply copy their signals and start making money with minimal risk and trading experience. How awesome is this? We've been using Pionex for a while and can confidently say, this is currently the best crypto exchange in the market. There are plenty of interesting contests where you can earn massive bonuses risk-free. Sign up for Pionex today and thank me later. Now let's quickly test this strategy on Bitcoin. Right away we can see how accurate the indicators are. Almost no losing trades were found. Traders, if you enjoyed today's episode, leave a like and subscribe to our channel for more.